for 5 minutes.
Thank you, Madam Chair, and thank you so much to the witnesses for being with us here today. Small businesses are the backbone of our economy and of my district. In Congress, I'm doing everything I can to ensure that they have adequate access to capital. Additionally, retail investors need the protections of our securities law to ensure they have access to vital financial information. If a company is underperforming, these non-professional investors would likely have a hard time accessing this information. Ms. Thornton, how would removing disclosure requirements harm retail investors that our small businesses, especially our minority-owned small businesses, rely on for capital?
I think it's important to remember that if you're a small business, you're actually going to prefer having just a handful of really sophisticated, really experienced investors that you can go to when you need more capital. Having a lot more investors, retail investors, people that don't really know as much and really can't afford to lose their funds, can actually be harder for the small business if they have to respond directly to them. And also, if those retail investors need to pull out of their investment, which typically in the private markets, investments are locked up for some time. So it's very difficult for retail investors in that case, and it's bad for the small business. So I think that the disclosures that we're talking about, making more disclosures, is actually both good for the small business and good for the retail investors. And you know, Mr. Elenoff referred to you know, democratization and how much due diligence is being done and all of that in his firm or the firms he works with. But in reality, that's not required at all. It's not mandated. It's not overseen by the SEC. The SEC doesn't have that information. But also, if companies are doing this due diligence anyway, if funds are, if companies are providing the information to the funds that hold them or whatever, there shouldn't really be any problem with adhering to the public disclosure framework. They should be able to disclose more information.
Thanks. Ms. Thornton, as you said in your testimony, if a company can raise all the capital it needs in the private markets without making disclosures, developing robust operational safeguards, subjecting itself to audits, or subjecting itself to SEC oversight and potential class action plaintiffs, why would it go public? So does the current exemption framework incentivize companies to stay private, therefore depriving investors of information that's important and meant to protect them?
Absolutely. It definitely encourages companies to stay private, to grow in the private markets, and really never to go public unless, for example, the founders or original investors want to cash out. And so basically, we have a perverse, distorted system where capital now is being invested with no information, which is basically the situation we had before the stock market crash of 1929.
Thank you so much, and I yield back.